Alright, what's going on, guys? Welcome back to another video. I know I've been absent. I haven't dropped much, honestly. I've been in Cali for about a week, just trying to get away for a little bit. Um, but just wanted to go over a couple things. This week, I've been mainly focusing on Asia session. Can't really tell you why, but the price action is just a little bit better, in my opinion, right now. More for intraday short term trades, not really scalping, but kind of just scaling down what I do for a regular day trade into shorter trades, which I guess some people consider scalping, but that's not what I'm doing. Not at all. I'm not gambling, so to speak. Um, so with that being said, just want to show you guys. I won't go over anything down here, but I kind of want to explain kind of what I'm looking for and what's been going out throughout this week. Let me take this away. I'm gonna get hate for using an EMA, but I don't care. I'll tell you guys why I use it on another video. Um, so we have this gap here, opening range gap. This was a lot higher. I think the gap for New York was up in this area, but I didn't mark that only because you can see that this new day opening gap price traded higher. Of course, this was between the 6 and 7 a.m. candle. New York Open was the opening of the opening range gap. So, with that being said, I saw that we traded right towards the new day opening gap, which is from Tuesday 1 p.m. to Tuesday 3 p.m. This is the session change. So, this is new day in other countries, like I've mentioned before. So, I did take short term sells into the gap. This was also during Asia session because, again, price action a little bit cleaner. We hit the gap. We supported here, so price had trouble coming through the gap multiple times. This is the 1 hour, so on a 15-minute or 5-minute time frame, you can see that we're just bouncing, and we expanded higher. So my target for that was these relative equal highs here, and that's what we were reaching for. Now that's pretty simple. If you can't, follow liquidity, then yeah, I don't know. Liquidity is king in these markets, which we do teach you how to follow liquidity. So if you can't do it, let us know. We'll help you out. So with that being said, we have clear expansion up into these highs. Now, if you were getting into these buys, this lasted between today and pretty much all Thursday. Yeah, from London through New York and some of Asia, pre-Asia, was just clear buys, and this was the overall target that we were trading to. Now, that's simple, right? If you follow liquidity, you can, really capitalize on these markets. Now let's get into something that's a little bit more difficult, and that's scaling down. Now I've been on the 1 minute. These are my actual trades that I've been taking for Asia so far. This was earlier. I took a loss here, regained it, sell, and then a buy that just happened. Now let's kind of go break these down a little bit. Let's start with the first initial buy. Here we have this FEG after we made a high. And the only reason I got into this buy is because every time price tried to push lower, it failed to even go lower. It kept closing in this fair value gap. So for me, that's a simple indicator, not indicator, I don't like using the word indicator, but a simple confluence for me to just buy up to these highs short term. I'm not looking for anything crazy, but price is having trouble pushing lower. So what does that mean? It wants to go higher. And then as you can see, I entered down here on I think second or third wick, and then we took the highs, right? Easy. Going to the loss here, it was actually a little lower. It was like this. I wanted price to take this low in particular because we had this massive drop. Now, the reason why I took this trade was because if we traded from this area straight to the low, that would give me an idea of where we were going next, which would be this low here. There was also at this line a volume imbalance. We'll get into that later. That I wanted price to reach. It did not do that. Actually, sorry. This is the volume imbalance. Also, the new day opening gap that price traded away from. Right. Same thing with the gaps. But there is a volume imbalance on here too. Again, we'll get into that later. We didn't do that. We traded higher, consolidated, came down lower. But as we came into higher, I still wanted lower pricing, and I wanted this low. So I actually got into the sells here at the FVG of the 5 minute. And of course, we hit this low and consolidated again. So in between that, we actually had a consolidation in the middle. This kind of is what set me up for the buys. Now, the buys were obviously the bigger trade, but just noticing the price action here, we have consolidation, 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 and once we made this last form of consolidation, price did not want to go into the gap of the high. So that gap was keeping price higher, right? So I kind of noticed, like, okay, this is an obvious market maker buy model or just buy model. This is something that we'll get into also that we use in the paid mentorship of how we traded and go about all that. Anyways, I'll just go over it simplistically for you guys. We have a form of consolidation, form of consolidation, form of consolidation. But this last piece in consolidation was in a rather key area for me. That was just because price did not want to go towards the new day opening gap high. Once I noticed that, I was like, okay, if it doesn't want to go to the high, we're probably going to trade higher. For me, that's kind of what set the tone for these buys. So I waited for price to kind of not break out, but essentially trade a little bit higher out of this consolidation. We came back lower, and then we saw nice displacement between these two candles here. Once I saw that displacement, I took buys on the first FEG. If we traded lower, that's fine. I really did not see price going back to these lows, so it was a pretty tight stop loss. But if price traded back to these lows, then I wasn't going to look for buys regardless. And the risk reward, you can see we just cleared the high even higher. The risk reward for this trade in particular was pretty intriguing. So if price reached stop loss, then I was not going to look for buys at all. So funny thing is, what's the 1 minute time frame? I entered right when we touched, I think on the second wick here, and 2-3 minutes after that, I saw this candle, and that's kind of what confirmed it for me as to as to where we were going, which was this high in particular. Now, we did just clear this high. I didn't like this consolidation here for the initial. The initial consolidation is always going to be your take profit point. I didn't like that part. I liked it more here because we're in Asia session. And I want to trade to the internal range liquidity, which is of this range. Where's my thing? Of this range from this high to this low. The high of this swing is the external range liquidity, and this low is external. So all the highs in between this range would be considered internal. So that is more of a clear target in Asia session for me in particular. Given that in Asia session we usually want to see consolidation, so that way there's more volume in New York, which is obviously where we trade this pair. But the last few days, like I said, Asia has had some very interesting volume that I wanted to get into. So as you can see, we did just trade above this high at external range liquidity, so we'll go ahead and mark that. Yes, we could have held to here, but just to more securely secure the trade, what the hell am I saying? This is where I wanted to go, and as you can see, price to target this area. Again, what confirmed it for me to not stay in the trade but have like a guarantee on this trade was after we spiked up, there was really no reason for price to come back down after this candle. As you could see, it was just gradually pushing up, up, up. So there was no reason for price to even come lower after we made this candle. I wanted to get another entry in here. It would have been like probably the 50% or something. And that one I probably would have rode to external range, but price was very bullish. It did not want to come into this area, probably on the 5. I don't know, maybe. Yeah, nothing really traded into it. If it doesn't trade on the 1, it's not going to trade on any, really. But just kind of want to go over this as a first video, and I don't know, I think it's been a week or so. I'll post this right away, so there's no delay on adding an intro or anything. I don't really care about that right now, but if you guys have any questions, let me know. Throw them in the comments, DM me, do whatever you got to do. And I'll see you guys back in another video. I'm not sure if I'll trade Friday or today or tonight. I'm still on vacation brain, but whatever. If I do, I want to start doing more live stuff, so I'll record myself as I trade so you guys can see like where I'm really entering in my thought process throughout each trade happening live, rather than me trying to do an overview about it, so it's more clear for you guys. Cool. I hope all this makes sense for you guys. If you have any questions, again, let me know. Join our free Telegram, and let's kill it the rest of the week.